Class 12th student. Today again I'm going to start chapter 11. Topic is balance of payment. This is part 2. In this video we are going to cover this chapter. Till now we had learned about what do you mean by balance of payment. So already I had told you in detail कि balance of payment is what it is related. It is an accounting statement. Why I'm calling it accounting statement? Because there is two side. It is based on double entry. Okay, there are two side, credit side and debit side. All the inflow of foreign currency, all the inflow inflow of foreign currency is recorded on credit side. Okay, student, and outflow of foreign currency is recorded on debit side. Okay, it is plus and it is minus side. Okay, negative side. So outflow yani ki there is outflow of the foreign currency, so it is deducted. So it is entry debit side, and inflow is recorded on plus yani ki credit side. So that is why it is known as an accounting statement, because it is having two side entry, debit and credit. Okay, about what? About economic transactions. So there are total four economic transactions: visible item, invisible item, unilateral, income from investment and work, and capital transaction. So these are the five transaction that is considered as a economic transaction. Between whom? Between residents of a country and rest of the world. So this is the meaning of balance of payment. Okay, now, so already we had discussed about the economic transaction. Visible yani ki goods, invisible yani services, unilateral we are talking about the transfer income, one sided payment. Okay, income from the investment and work, it is related to factor income. Okay, now capital transfer, so there are it is related to capital receipt and capital payment. Capital receipt is related to borrowing from and repayment of loan. Okay, and capital payment yani ki lending. Okay, now in next term we had discussed that ki this first yani ki visible item is known as a balance of trade. Okay, and these four yani visible item, invisible, unilateral transfer and income, factor income, it is known as a current account. And this last one, capital transfer, it is considered as a capital account. Okay, and all these five are considered as a balance of payment. Okay, student, now today I'm going to explain you what do you mean by current account, sorry, capital account. So today topic is what? Today topic is current account. So before that, what we had learned? Okay, now balance of payment, actually it is divided into two parts. So there are two components, current account and capital account. Okay, already we had discussed about the current account. So current account is related to export and import of goods, export and import of services. Okay, unilateral transfer from abroad and to abroad. It is related to income receipt and payment from and to abroad. Okay, so these are the part that is related to capital account. Okay, so already we had discussed it. Now second is what? Second is capital account. It include three things. First is borrowing and lending to and from. Second is investment to and from. So investment is of two types, FDI and FII, that is also known as a portfolio investment. Okay, in detail we are going to discuss it. Now third component is change in foreign exchange reserves. So remember, when you are discussing Radha Bahuguna book or Sandeep Garg, okay, so there are only two component of balance of payment. Okay, current account and capital account. But when we are going to discuss VK Ohri, Jan and Ohri, so there are three component: current capital and official reserve account. So remember, if this part, this third one, if you are going to include in capital account, so this, there will be no official reserve account. But if this is not included, then there will be official reserve account. So one more in very simple language. These two, if there is only these two in capital account, so this one is known as a official reserve account. Okay, this is considered as a official reserve account. But if you are going to include all the three, so there will be no official reserve account. Okay, let me understand in detail. So, okay, first of all, what do you mean by capital account? So, capital account of balance of payment record all those transactions between residents of a country and rest of the world which causes a change in the assets or liability of the residents of a country or its government. So, remember, capital is related to those transactions which are going to make the change in assets or liability. Okay, on the other hand, if you talk about the current account, so there will be no change, there will be no change in assets or liability. Okay, so that is current, but those transactions that going to make the change, that is considered as a capital account. Okay, it is related to the claim and liabilities of financial nature. Okay, so now capital account is related to what? Financial transfer. And that is why it is not going to affect. There will be no effect on income, output, and employment of a country. Okay. So actually, capital account is just related to changes in the ownership, changes, purchasing of stock, are fixed assets. So there is only change in ownership, there is no increase in the production. Okay, employment. So this thing you have to remember. Okay, so what do you mean by capital account? Those transaction that is going to make the change in assets and liability. Okay, they are in financial in nature, and they are not going to affect income, output, and employment. Why? Because there is only change in ownership, there is only change in ownership. Okay, there will be no change in production capacity of an economy. Now here we are going to discuss about the component of capital account. What are the capital component of the capital account? So first is borrowing and lending to and from abroad. Okay, so it include what? All transaction related to borrowing from the abroad. It will be recorded on credit, yani positive side. Why? Because when you are borrow money from America or for foreign direct for World Bank, yeah, International Monetary Fund, so there will be what? There will be inflow. In this case, there will be inflow of foreign currency. So whenever there will be inflow, it is recorded positive side. Positive side yani ki credit side. Okay, so it will be recorded on credit side. Okay, all the transaction of lending to abroad, okay, it is recorded as negative yani ki debit side. Why? Because there is outflow, because there is outflow of foreign currency. Okay, like if India is taking 500 या 1500 crore money from the World Bank, so this foreign currency will be where? This is going to come from America to India. So there will be inflow. So that is why it is recorded plus side, yani ki credit side. On the other hand, suppose India is going to give money to Afghanistan, या फिर going to give money to Nepal. So in this case, there will be outflow. India is going to give loan to Nepal or Afghanistan. So in this case, there will be outflow of foreign currency. So that is why it is recorded on debit side. Okay, next is investment to from abroad. So investment from the abroad, it will be positive value, yani it will be recorded in credit side. Why? Because there will be inflow. If American will come in India, they will do the investment, so they are going to carry what? They are going to carry dollars, so they are going to supply the dollar, so there will be out inflow of the dollar. So that is why it is included on credit side. Now, investment by the Indian, it is going to be recorded on negative side, yani debit side. Why? Because there will be outflow of foreign currency. Suppose take any example, like if Mukesh Ambani is going to make the investment of 2000 crore or 100 crore in any other country, so there will be outflow of foreign currency. So it is recorded which side? Debit side. So remember, inflow is always recorded credit side, outflow is always recorded debit side. Okay. Now, here you have to understand that there are two type of investment. Okay, first is foreign direct investment, and next is portfolio investment. Portfolio investment is also known as a FII. So this is very important. Now, what do you mean by foreign direct investment? देखो, foreign direct investment, here ownership, here the foreigner is going to have the ownership, okay, power of ownership. He's going to set up his industry, a unit of his organization like Microsoft. Okay, so here ownership is going to be in his or her hand, so profit is going to that person. Okay, so that is foreign direct investment, that is going to give directly control. Okay, direct control. So what is written here? It refers to the purchase of an asset such that it gives direct control to the purchaser over the assets. Okay, like purchasing of land, building, setup of new office, setup of Microsoft office, all the MNCs. Okay, BPO. So these are the example of what? Foreign direct investment, where ownership is going to be hand of the investor, foreign investor. Okay, now next is portfolio investment. Portfolio investment is also known as a foreign institutional investment, yani FII. It is the another name of portfolio investment. So there will be no direct control. There will be no direct control over the assets. Actually, it is related to what? It is related to purchase of shares. So here there will be purchase of share. Okay, in the first one there will be purchase of assets. So that is the different. Now the third part of capital account is change in foreign exchange reserve. Okay, we know now who is custodian of foreign exchange. तो RBI या फिर सेंट्रल बैंक ऑफ अ कंट्री इज कस्टोडियन ऑफ फॉरेन एक्सचेंज. तो इफ यू टॉक अबाउट द इंडिया, RBI, Reserve Bank of India, is custodian of foreign exchange reserve. Okay, so the foreign exchange reserve are financial assets of the government held in central bank. A change in reserve serve as a financial item in BOP. Okay. Now, what you have to keep in mind. So this is the thing that you have to keep in your mind. Okay. Withdrawal. Withdrawal is positive and it is recorded on credit side. On the other hand, any addition to foreign exchange reserve, it is going to have negative sign and it is recorded on debit side. Why we are doing that? Because because to to balance of payment, यानी कि to maintain inflow of foreign currency is equal to outflow of foreign currency. Okay, why we are doing that? Because we want ki export become equal to import overall balance of payment. Okay, otherwise you can say inflow of foreign currency become equal to outflow of foreign currency. Okay, so for this we want, okay, one more thing I want to explain you, ki withdrawal. Why withdrawal is recorded as a positive? Because withdrawal, in the case of withdrawal, like if suppose um, if there is surplus in balance of payment, yani our export is greater than our import, Yani suppose 120 is the export and 100 is the import. So this 20, okay, this 20 will be the surplus. Okay, so government is not going to keep it because we have to maintain inflow is equal to outflow. The government is going to use this, government is going to use it, okay, and going to use it for the purchasing of fixed assets in the foreign. So in this way there will be withdrawal, so it is recorded on positive side. Any addition is recorded negative side. Why? When there is condition of deficit, there is condition of deficit BOP. It's mean what? It's mean that ki export is less than import. Okay, yani suppose export is 100 crore and import is of 120 crore. Now this 20 crore we are having just 100 crore to pay, and we are require how much money? 120 crore. So what for this 20 we require, borrowing, या फिर we are going to sell our fixed assets in foreign country. So in both the case there will be what? There will be inflow, there will be inflow of foreign currency. So that is why this addition is going to be recorded on debit side. So I think you are able to understand, and technically just keep in the mind if withdrawal is recorded positive side and addition is recorded negative side. Okay, and in this way balance of payment is going to be balance. Now balance on capital account. The transaction which lead to inflow of foreign exchange, that is recorded credit or positive side. Okay, outflow of foreign currency, it is going to be recorded on debit side. So you have to keep in the mind to export whenever we are going, so export minus import. Okay, so the net value of credit and debit balances balance on the capital account. Okay, now surplus in capital account arise when credit item are more than debit item. Okay, yani when inflow is more, net inflow is more, debit यानी कि debit money lag. So debit in capital account will arise when debit item is more than credit item. It indicates net outflow of capital, there will be more outflow of capital. Okay, in addition to current account and capital account, there is one more element in balance of payment, that is known as errors and omissions. So it is balancing item which reflect the inability to record all the international transaction accurately. तो कोई चीज़ आप भूल गए, मिस्टेक हो गया, तो उसको आप error and omission वाले में आप लिख सकते हो. Okay. Now overall there is a component of the capital account. Okay. So capital account credit side, what we are going to write? Borrowing and lending to and from. Debit side only lending. And when we subtract credit minus debit, we get net borrowing from the abroad. Next is investment from the abroad. So investment to abroad and net investment from abroad when we subtract debit and credit. Now third, change in foreign. To decrease we are going to write credit side, increase we are going to write debit side, and difference of it is known as a net change in the foreign exchange. Okay, so in this way capital receipt is equal to 1 plus 2 3, and capital payment is related to these three, and when we subtract we get capital account balance. Okay, now difference between current account and capital account, what are the difference? It is very important, you have to learn it, so it is important for your board examination. First of all, current account. So current account is related to those transactions that brings a change in current level of a country income. So इसकी वजह से country की income में changes आते हैं. Now if you talk about the capital transaction, so it will take the change in capital stock of a country. It changes capital stock, it changes capital country income. Okay, now next difference concept. Current account is a flow concept, and account is related to stock. Okay. Now component to current is related visible यानी goods, invisible यानी services, unilateral transfer यानी कि transfer income, income receipt and payment, it is related to factor income. So it is sum total of what? Export import of services, export import of goods, export import of receipt and payment of transfer income, receipt and payment of factor income. So these are the part of the current account. Now talk about the capital account. So borrowing and lending to and from abroad, this is the first. Investment to and from abroad, this is the second. And third, change in foreign exchange reserve. So these are the three. So it is related to four, these are the related to three. Okay, so this is the major difference. Now next topic, and very very important topic, is difference between autonomous and accommodating item. Remember, current account, current account, and there are two account, current account and capital account. Okay, there are two account. So whatever transactions is done in capital account, that is the part of autonomous item. Okay, now whatever transaction is done just to maintain balance or payment balance, so that is considered as a accommodating item. Okay, so it is recorded as a above, yani ki first we record current account in A part, then in B part we are going to record capital account. In capital account there are three component. First is your borrowing and lending. Second is your investment to and from. Okay, and third is change in foreign exchange reserve. Okay, so remember this last one, change in foreign exchange reserve, it is done to balance BOP. Okay, so in this way accommodating is only related to capital account, autonomous is related to both. Okay, so let me understand now with the help of the book. Now, autonomous investment refers to those international economic transactions which take place due to the some economic motive, yani for profit maximization. So it is done for the profit maximization. It is done It refers to those transactions that undertaken to cover deficit or surplus in autonomous investment. So if there is surplus, then whatever transaction is done, that is accommodating. If there is deficit, whatever transaction is done, that is accommodating. If balance of payment is balanced, so there will be no auto accommodating transaction. Okay, now effect on BOP account. The autonomous transaction are independent. Okay, it is not related to balance of payment, it is not related to making the balance, it is done for to do the balance in balance of payment. Now autonomous transaction take place in both current account as well as capital account. On the other hand, accommodating transaction only takes place in capital account. So this point is very very important. याद रखिए जो फॉरेन एक्सचेंज रिजर्व, जो चेंज इन फॉरेन एक्सचेंज रिजर्व है ना, इसमें जो भी ट्रांजेक्शन होता है या तो वो डेफिसिट की वजह से होगा या सरप्लस की वजह से. अगर डेफिसिट सरप्लस नहीं है, बैलेंस है, तो ये होगा ही नहीं, यानी एकोमोडेटिंग आइटम होंगे ही नहीं. ठीक है. नाउ अल्टरनेटिव नेम known as a above the line. When we are going to prepare the balance of payment sheet, so in the A section there will be current account, B section there will be capital account, here will be overall balance of payment. Okay, and if in this way, if it is not going to be balanced, so whatever transaction is done, that is the part of accommodating. So that is why it is known as a below the item. Okay, now disequilibrium in balance of payment. So balance of payment is it can be surplus or it can be deficit. So when payments of the country are less than the receipt, so it is surplus condition, यानी our export is greater than import, या फिर inflow of foreign currency is greater than outflow of foreign currency. So this case is known as a surplus, okay, and balance of payment will be favorable. Now deficit balance of payment, to who, which is going to more, outflow of foreign currency is going to be more in compared to inflow of foreign currency. So this is known as a unfavorable, okay. Now, what are the reason for this disequilibrium? So, first of all, we are going to learn economic reason. So, development activity. You know, now India is an developing country. Like India, there are many countries. So, in that case, they have to they have to expend a lot, okay. They have to do infrastructural development, so for that they require many goods, so they have to import it, and because of that import become greater than export, okay. So that is written, and because of that there is deficit, high rate of inflation. So we know India, there is too much population, propensity to consume is very high, so in this case inflation is going to be very high, and uh, so that is why in compared to Indian goods we feel foreign goods are more cheap, so we are going to purchase foreign goods. In this way import is going to be more, and there will be deficit in balance of payment. Now trade cycle. So, domestic countries going through a phase of recession, depression, then domestic production may be unable to satisfy the domestic demand. So, there will be deficit in balance of payment or surplus. So, there can be any condition. In recession, there will be surplus. In depression, there will be uh, recession and depression, there will be deficit, and at the time of boom, there will be surplus. Now, change in the cost structure of trading partner. So there, because of the technical change, cost will fall, price will fall, okay, and there will be surplus of balance of payment. If is going to be higher, so there will be less import, and there will be deficit in balance of payment, okay. Now development of import substitute. Okay, if country is able to develop import substitute, so there will be surplus BOP. Okay, and not able to, so there will be deficit. यानी कि if we are import substitutes means what, अगर हम सारी commodities को खुद से produce कर सकते हैं, तो in this case we are going to do less import, we are going to do more export, there will be surplus. If we are not able to do import substitution, so we are going to purchase many things from the outside, so there will be deficit, okay. Now for political factors. So if there is political instability, so there will be BOP deficit. If everything is positive, so there will be surplus BOP, okay. Now policies of the government. If government is in favor of import, so there will be deficit. If government is favor of export, yani export promotion is the policy, so there will be surplus BOP. Now social factor, demonstration effect yani कि we are going to copy the lifestyle of developed country. So in this case there will be adverse effect on balance of payment, and there will be the deficit, okay. Now, changes in taste and preference. So, if there will be favorable change for the domestic good, so there will be surplus BOP. If change will be unfavorable for domestic goods, so there will be deficit in balance of payment. Okay, cross border prejudice. So these may be force country to have expensive import and cheap export, which may cause deficit in balance of payment. So this is in the case of India. India is mainly exporting primary goods or manufacturing goods, so its price is less. And India, what it is importing, it is importing capital goods, so its price is too high. So because of that there is unfavorable balance of payment, okay. Now this equilibrium can be corrected by the promoting export, devaluation of the domestic currency, reducing inflation, import substitution. So these are the measures. With the help of that, we can correct. Thank you for today, student. And in this way, this chapter is over. Your book is over. Okay, and just 2 chapters are remaining in Indian economy. We are going to complete it. Okay, thank you, student.